Hey, good evening, everyone. Futures Brizio here. It is just after 9 p.m. on Thursday, May 9th. Hope everybody had a great day today. And just doing another quick update here regarding the taking these trades on line charts and still experimenting around with this. And, overall, it's been a couple of green days here for me. Not overly. I've definitely taken some losses too as I kind of tweak the strategy. But nonetheless, still going pretty well. Um, so I just wanted to talk about a couple of tweaks that I might make in terms of just time frame. So I've been trying to take these trades off of the 5 minute chart. And as you know, I mean, trading on a really short time frame like that can be very noisy. And in hindsight, they can look pretty good in terms of opportunity, but from a standpoint of real time trading, it's really, it can be very stressful to trade on real short time frames because things are happening so fast, and sometimes you get sucked into the price movement, and you have to make fast decisions. Sometimes they're just rushed decisions just because you're seeing things happen so quickly, and potentially there's FOMO involved and everything else. So I'm thinking about just I'm definitely sticking to it, this strategy as is, but to kind of up the time frame a little bit. I'll talk about that in a second. So here's like I took this trade today on ES. You can see the entry down here, which was a really good entry. I think we were starting to go through an uptrend. We had this downtrend, and then leading into the start of the North American session, which was right about here, we had this little pullback, and prices just went up the entire day. And you can see I only got about half that move. I exited right here, and it was because price was starting to break below this structure level. But if I go up to a little bit higher time frame and we look at this area on the higher time frame, now again, keep in mind the time here. This is 3 hours. This is like 6:30 in the morning at this point when it broke this downside structure. I may not have been in front of my charts at quite that early. Potentially at this one, because this was now at quarter of what it'd be. This would be quarter of 8. So for sure this one. And you can see, but even if I just got in where I actually got in right here at this blue arrow, you can see there was never an exit. We never got, even on this pullback, we never came close to coming back to this area here, where there was obviously a major structure zone, right at this low where this blue arrow is. We had this tiny little area right here, but that you could have just ignored on this time frame. We had a pullback, and then prices continue to go up the rest of the day. We continue to make new highs right up until the close. So, and so, like I said, this is a 12-minute chart, which is, I know, kind of odd, but I kind of like it because a lot of this stuff is self-fulfilling properties. The major time frames, if you're trading on a short time frame, it's usually like the 5-15 minute chart, maybe a 10, maybe a 30, those are lesser used, but a 12-minute chart is kind of like oddball. Like, how many people actually use a 12-minute chart to trade, if you're on a short time frame. And it's kind of an interesting type of time frame, and I'll give you another example right here. So this is gold, and if you look right here, now this is very minor, so I'm not saying this is hugely important, but if you look right here, we had this push up, and then price came down right here, and you can see this high on this pullback is still higher than this low. I mean, this low is still higher than this low, suggesting that this downtrend has ended, and this was just a pullback. If I go to the 15-minute chart and I look at this, now they're even. Okay, now these areas are even. And I'm not sure about the 5 minutes. Let's look at it on the 5. And even on the 5 minute, they're even. Okay, now, that's not all that bad. It's not like it's longer than that. But on the 12-minute chart, this low never even came really all that close to this low, and then it started to immediately go up again. And of course, the reason for that is just because it's a 12-minute chart, so the calculation is different. It's just a different time frame. But I think some of it also has to do with, kind of self-fulfilling prophecies on the more heavily traded time frames. And so I feel like something like, whether you use a 10-minute, 12-minute, 15-minute chart is still short enough where you can definitely get trades, on at least one of these assets every day. But long enough where, you can be a little bit more patient and let the trades develop even during these volatile times. And look, this is gold. I mean, gold this asset by nature is really tough to trade. It can be very volatile. And in fact, if I put my trade history back on, you can see in this area, look how many trades I took. And I'm showing you guys this just to be completely honest, because I'm still experimenting. Now, I took very small sizes on this. These are like, one contract sizes. So it's not like I was really over leveraging. So, if I took a loss, it was very small. It's not like I killed my account. And I said, if I do get a good winner, great. And I did take one good winner, but I probably gave a lot of it back, right in here. And you can see ultimately the price did drive higher. And that's another thing to, to consider, right? Like if I was using this time frame and wasn't distracted by what was going on inside of here on a 5-minute time frame, I probably would have held this. And then, there was never a point, from here up that you would have exited this trade. I mean, right here, it launched right above it. Once it broke this high, we had this huge imbalance and price rode up. And even right into the end of the day, of course, the market's open now. But right into the end of the day, even though things slowed down, we still were making these little impulse highs going into the after hours market. So, I mean, it's just kind of a tweak that I'm going to make. And, everybody has to make their own decisions. Again, the markets are fractal, as you know, so you can do this on any time frame. I mean, I could go to a 1 hour, a 4 hour, daily, a weekly chart and do the same exact thing. Or any of these time frames in between here and do the same thing. I just choose to, take my day trades and be out. But I would like to hold them long. I don't really like being a scalper because the risk of just taking a few points off the board that you can easily give back on the next trade, plus you're paying, commissions on all these trades to your broker, which is going to eat into your profits if you're taking a lot of trades during the day and they're only, small little positions. You still got to pay the commission, whether it's a win or a loss, and whether you're in and out in 2 seconds or whether you hold the trade all day. You still got to pay that commission, right? So I would rather be able to hold them longer if I can and, try to squeeze as much out of them and not be so easily sucked out of them. And so, look, that's a mental thing. And but overall, though, in terms of the strategy and just, saying, okay, I'm looking at this, what this asset did all day today. If we just extend this box, I mean, this was really the day today which again started at around, about 3.5 hours before the session. So about 6 a.m. this morning is when this uptrend started, and it never looked back the whole day. Yes, there were some volatile times right here where it went down. Then we had this choppiness area here for, whatever this is, for a couple of hours. So this was from 1400 to, this was about an hour and a half of choppiness here where it just kind of whipsawed, but eventually got its footing and went back. And again, if you were in this from, say, down here, there was never an exit. Even with all this, there was no exit. We never took out this swing. This low came back to, this high. So this was a good little demand area where, this previous resistance turned into support. And again, we never came close to that, on this low right here, at least not on this time frame. So, so I'm going to continue to use the line chart. You see, I even took the Williams percent range off the chart. I'm just strictly looking at the line chart now. And I'm really liking this. I've had, honestly, even with all this choppiness, I've been pretty much green every day this week, to varying amounts. Not as much as I'd like to be, but considering it's a new thing for me, I think it's pretty good. So I'm happy with it, and it's been pretty much the same across all these assets I trade. Whether it be gold, or natural gas or NQ, S&P, NASDAQ, or I did add the Dow futures on there. And the Dow and the NASDAQ and the ES all move fairly similar, but sometimes there's a better pattern. One's more clear than the other one. And actually, there's a little interesting thing with the NQ right now. So if we look at the NASDAQ, this is the 12-minute chart. You can see we've been stuck in this range here since for about 2 days now. We really haven't done anything. Now, of course, again, on a short time frame, you could trade this, but this is a 12-minute chart, not really a long time frame. And you can see, other than this little breach right here, we've just been trading very flat inside this range. But if you look at the ES, okay, the ES has not done that. The ES has been trading, trending up. I mean, it did have a little consolidation, and then it shot up today, whereas the NASDAQ did not. So they're not really the same. And if we look at the Dow, was the same, much like the ES, and like this is a perfect pullback right here. I mean, if you were a trend line trader, you could actually just stick a trend line over this, and as soon as this is broke, you could go long. And that happened at probably around market open today. Yeah, right at the open today. And again, it never looked back the whole day. I didn't trade this today. I just added it late in the day to my list, but it will be something that I pay attention to a little bit going forward. I had this one little trade on it from the other day. It's tiny, that I opened and closed while I was just screwing around. But you can see I haven't traded this otherwise. I think it's. I think there's a lot of potential here, and again, that's why, like I said, the ES, the NASDAQ, and now the Dow, they do all tend to move in the same direction. But before I take a trade on one, I'm going to look at all three of them. It's not like I'm going to take a trade on all three of them, but I'm going to pick the one. If I feel like there's a setup and it's trending, I'm going to pick the one that's got the most obvious setup. That kind of jumps off the screen, like something like this. Whereas in this case, I would have avoided the NASDAQ because this is just choppy and messy. It didn't really go anywhere. Where at least the Dow and the S&P did something, right? They was impulsive. There was an imbalance, and they moved. And that's really all you can ask when you're trading trends. So I just wanted to talk about that. I'm going to continue to experiment. Now, I'm not saying again that I won't ever look at the shorter time frame, like the 5-minute. Maybe I'll use it to fine tune an entry, on something like this. This breaks the trend line. Okay, that's one way you can get into this, as soon as it clears these highs, because it didn't look back. But if you weren't going to do that, is there another way you could get into this if you didn't want to just trade the trend line break? Well, and I'm just looking at this now, but here's the 5-minute chart, right? We broke above here. We had this little tiny pullback, and we had another one right here. Right, anywhere right in here was a good signal to go short, to go long. You could even look at the 1-minute chart, and you can look anywhere. Whoops, my auto scroll is turned on. Right, so here's the break, and then anywhere, like say right here, would have been a perfect entry. Right, broke through, retested, chopped around, then boom, took out all the structure again. You could have gone long right here and rode this up. So again, I'm not saying that I'm not gonna look at the shorter time frames at all, because again, sometimes you're going to get these, especially with a line chart, since it's only plotting the closing price, you're going to get these hockey stick type moves with on a particular time frame, you're not going to see any place to pull back because price is moving so impulsively. But those moves, those little pullbacks are visible on a shorter time frame. So I'm just saying that, like, my analysis time frame, my initial look will probably be on something like this chart. And then if I see a setup, then I'll drill down to a 5-minute, maybe a 1-minute, just to get a better entry, kind of see what's happening down there, set my stop loss and take profit levels, or especially stop loss, just getting in initially, and then just let it go, and then go back to the higher time frame and play the trade off the higher time frame. And again, if it looks like maybe it's turning back, away from, against me, once it maybe gets into profit and starts to pull back, then at that point maybe you use a shorter time frame to draw that out, but not wanting to go too short, and get pulled out early because of what is just kind of a deep pullback on a shorter time frame is really just a little blip on the 12 minute, like this area right here, right? This area right here on a short time frame probably looks a lot worse. In fact, we could just take a quick look at this. Let's go to the 5. Not too bad there. We didn't really take out any structure. So let's look at the 1. Yeah, I mean, like even on a 1 minute chart, this particular one doesn't look that bad. Didn't really take out any structure, and it was very choppy. So that's not a good example, but you know what I mean, is that I think I was showing that on gold. Yeah, this right here, right? On the 5 minute time frame, this looked really bad, right? Like, oh, this thing is turning now and going down. But on the 12 minute, it really didn't. It was just a little correction. Price chopped around for an hour and a half. Didn't even make a new low here after this swing low, and then it kept going. So that's what my point is. So I just wanted to make that tweak. Just wanted to kind of review a few trades from today. And again, it's been a positive week. Just not as big of numbers as I would want, because I'm still taking some losses as I experiment, but a green week's a green week, and I'll take it, especially learning something and getting my eyes adjusted to something new. And the other thing like I mentioned is that I don't completely abandon candlesticks. I'm still using candlesticks, especially for stop loss areas, because I want to know where those wicks are. These basically represent the body. The closing price is going to be, somewhere on the body of the candle. If it's a down candle, it's going to be the bottom of the body. If it's an up candle, it's a positive close, it's going to be the top of the body. Okay, but it represents the body. But I need to see those wicks. Okay, just for the purpose of stop loss place. I don't necessarily need it for entry, but I would like to see it for stop loss placement and for structured zones, just to kind of have that feeling. But then I quickly go away from it. Once I have that established, I come back to the line chart, because it just I only want to really see the closing price. The candlesticks at the wicks and the bodies and all the movement is just showing you a lot of the price manipulation. It can really trick your brain and your eyes when you're seeing those candlesticks go up and down, whereas this is just representing the pure closing price, just plotted as a line. And again, it's not that it's perfect, because it's certainly not. And like I said, because I do still look at candles, but overall, I'm just, I'm only using the candlesticks just for a little fine tuning and tweaking and setting certain levels that where I need to see the wicks at least temporarily. So, all right. And then the last thing, guys, is just to jump over to my Forex demo account. And we've been sitting on this Euro Yen trade. And you see I got the candlesticks on because I was trying to fine tune it. I've been sitting on this Euro Yen trade now for about 3 days on this 4-hour chart, and it's still going up. Hasn't hit my take profit yet, but it's close. And I turned the candlesticks on because I was trying to fine tune, because Forex is notorious for coming like right to your take profit level and then not getting filled because the liquidity dries up at that level. So I always back off of it a little bit and make my profit, instead of putting it like, and it might go right through here, it might keep going, go up to this high or beyond, but again, this is a demo account. I don't really care. I was just really experimenting. But let's say it only does come to here and then rolls back down. Well, if you try to put your take profit right at the top of these highs, there's a very good chance you won't get filled between the spread and just the liquidity drying up. So I come down a little bit further and just be a little more conservative. And if this was a real money account, I'm not going to, give up, making $1,000 on this trade just to squeeze out an extra $100 and risk giving back that 1,000, right? I'm just going to take what I can get and I'll be out. And this thing, if it fills, again, it's only demo money. I'm admitting that it's over $1,100 in profit. So I'm not going to give up on that. Just to squeeze out a couple more pips, especially with, again, you have to deal with spreads, in Forex that you don't really have to deal with in futures. And that alone, especially during a low liquidity time, the spreads widen and you won't get filled. You won't get filled. And the price will hit your level. It'll go right to your take profit and it'll turn and go back the other way. And you'll open your chart and you'll see that the candle wicked out right at your level and you didn't get filled. And it's not your broker screwing with you. It just has to do with the fact that there's there's no orders and there's no liquidity, and spreads are having to be calculated, in that, and it just, unfortunately, it happens. And anybody that's traded forex especially knows darn right well what I'm talking about. You've probably had that happen many times, where it runs right to your supposed take profit price and you don't get filled. And if you're not watching and you happen to go back later and you see the price is now reversed and you've given back a lot of your profits, or worse, you get stopped out after being right at take profit, that's just the most frustrating thing in the world. So anyway, so we'll see how this plays out. I have a feeling I'll be out of this either way tomorrow, just because of where it is. But we'll see how it all plays out. And then for the yellow forex pairs, I've narrowed it down to basically 1, 2, 3, 4, 5 forex pairs. A couple of dollar things, obviously a couple of euro. I threw in one Aussie pair, Aussie Swiss, and I got this 1 yen pair with euro yen, and that's all. So I'm going to experiment with this line chart stuff here on these, because like I said, forex is definitely can be a tougher animal to do this with. So I'm going to experiment and with levels and trading on these forex demo accounts, in addition to working my live futures account. And I'm hoping that this improves my accuracy in terms of setups and identification. And again, if you can do it on forex pairs, you should be able to do it in futures. I said I'm not trading futures with live money anymore. I don't know if I'll ever go back to it. I think it's to spend the mental energy to try to trade two completely different markets, I think is asking a lot. You're going to spread yourself too thin, like I said, mentally, and trying to analyze different markets, unless maybe you just pick one futures pair asset and one forex pair, and that's it. You're just looking at 2, maybe 3 markets total, and that's it. But this is 5 forex pairs, and I have potentially 5 futures assets, and that's too much. It's probably too much just for the futures too, but it's definitely too much if you're now going to add 2 completely different classes of trade too, and this forex is completely different than futures in term. A chart's a chart, but in terms of how they operate, and having one currency pinned against another one can just lead to all kinds of craziness on the charts. Whereas if you're trading futures, you're just trading that one asset. Yes, you're trading all the things that make that asset move, but if you're trading gold, you're trading gold, right? You're not trading gold against the US dollar, which is actually a type of forex pair. You can't trade it in the US, but if you're trading natural gas, you're trading natural gas. You're not trading the Aussie against the Swiss, right? And having to balance everything that goes into trading 2 currencies. But I kept the Aussie Swiss as one of my pairs, just to keep one Aussie, to keep one Asian, Aussie or Kiwi dollar. I chose the Aussie. And I also, as I looked through this pair, I felt it had better structure levels for line chart trading than other ones. So that's how I ended up deciding on this one. So anyways, I will leave it there, guys. I'll keep you posted on this euro yen, see what it finally ends up doing. And as we continue to experiment with these futures and using the a little bit higher time frame, I will keep you all posted on that too, and see how those trades work out. And I'm very confident that this will continue to develop positively for me, and I'm looking forward to sharing that information with you. So guys, on the way out, make sure you smash the like button, subscribe to the channel if you're just finding it, and any questions, comments, obviously leave them down below. And I look forward to talking with you all again soon. Have a great night.